Let's now shift focus on India macros and markets and talk about what is Goldman Sachs's big India call and whether they see that India is going to maintain its outperformance or not. We have with us on the show Sunil Koul, Asia Pacific strategist at Goldman Sachs, joining in on the show right now. Sunil, hi, good morning. Great to have you in the show. I was just going through your latest notes, Sunil, where you talk about India's strong outperformance with strong fundamentals, but at a premium price. Wanted to understand what's going to give up first, the outperformance, or you think, the price is going to course correct at some juncture?
Look, you're right. If you just look at the Indian equity markets, as we all know, they have been outperforming for 2 years in a row now, right? We think the fundamentals are still strong, as you mentioned, but the market may likely sort of trade sideways in the next sort of 3 to 6 months before sort of moving higher, because multiples may sort of modestly correct because India's valuations are expensive relative to the rest of the region. But given we are expecting strong fundamentals and strong earnings growth of around mid-teens for the next 2 years, we think markets could sort of go higher over the next 12 months.
Okay. In the event that happens, and the fact that we course correct, valuations ease off a little bit, and perhaps we go into a sideways, movement in the next foreseeable future. Given the kind of sectoral rotation, Sunil, that's currently playing out, what do you think is going to dominate the market mood, both on the upside and downside, sectorally?
Yeah, I think it still makes sense to be in the domestic cyclical sector of the economy. We have been overweight the domestic cyclical sectors last year or this year as well. That has broadly worked out. We were overweight banks and underweight IT. Both of those sectors have generated decent alpha for the investors. I would say, I think looking forward into next year, we continue to believe that banks can continue to outperform the broader markets. We are expecting very strong earnings growth from the banks, with around sort of high teen loan growth and kind of stable to higher margins for the overall banks. We think NBFCs, the profitability may come under a little bit of pressure given the tight liquidity environment we are currently seeing and the rising cost of funds. So within financials, you want to be long banks, you want to be a little bit cautious on the NBFC sector. The other big focus, I would say, from our standpoint, has been the broader manufacturing sector, the infrastructure, the cement, the ENC companies, warehousing, logistics, all of that. So we think there are very strong signs that the private capex cycle is coming back. Obviously, government has continued to focus on infrastructure. There is growing progress on the Make in India and the PLI schemes as well. So you put all of that together, we think the manufacturing sector as a whole should also do well. And I will also put in insurance in there. So I think banks, insurance, and the broader manufacturing sector, industrials and cement should likely do well next year. On the funding side, as I mentioned, we still think it may be too early to get back into the IT sector. We think the estimates there are still optimistic. We think the tech spending, although it has been resilient this year, may soften a little bit next year, and so the top line US dollar revenues will likely slow, and there'll be more earnings cuts. So we're still underweight that space, and we are also underweight the broader consumer discretionary durable space overall, because we think that's too expensive, and there are already signs of some slowdown in the urban consumption we are seeing.
Sunil, morning. So that's getting a sense of your overall structural outlook in terms of sectors. But given the fact that you have seen some of the other emerging markets underperform, the fact that you have the world's biggest economy as well, which has been under huge pressure, what's your outlook on the FII positioning for India in the coming months and years?
Right. One of the big calls we are making from a regional perspective is that we are sticking to India at a market weight allocation. Part of that is because of performance, part of that is because of the high valuations. But we also think that there are other North Asian markets which could do better next year, notably sort of China and Korea, because of the reopening catalyst in China, as well as sort of the global economic recovery in the later half of next year, which should help Korea. So clearly, I think from a country allocation perspective, at least for the 3 to 6 months, we think India may trade sideways, as I said. The one reason we don't think there could be a sharper correction in Indian equity markets and the valuations could kind of hold on to its levels is because of the exact point you mentioned, which is that the positioning has been pretty light. So as we all know, there has been in round numbers, about 20 billion foreign net selling this year already. If you look at the FII ownership in the top 200 stocks, the BSE 200, it's already at 8-9 year lows. We do track a lot of benchmark positions in terms of how emerging market, Asia, and global funds are doing. It still seems like the Asian emerging market allocations, even though they are slightly overweight, the extent of overweight is way below the historical peaks. Funds are around 100 basis points overweight India, but India's weight in the benchmarks has also increased. So they still are way less overweight than they had been in the past. The peak was around 500 basis points, and we still feel that the global funds have been underexposed. So there is a lot of demand that is coming in for India from a lot of the conversations we are having, especially from the global folks, because there is a rising sort of EM ex China and Asia ex China theme that's also playing out in terms of a lot of funds opening the ex China mandate. So we think the global flows can come back maybe towards the second half of next year. So given how light the foreign positioning has been.
Given that, you're expecting corporate profits to grow 15% in 22-23, do you think that to a great extent this smart earnings growth is already priced in?
Yeah, look, I mean, the mid-teen earnings growth India would be expecting, it's still far superior than what we are expecting in many other parts of the region. So for the regional aggregate as a whole, we are sort of looking at 7 to 8% earnings growth. So India is still likely to deliver almost 2x the earnings growth than the other markets. As I said, it does feel like in the near term, some of this is already in the price, even if you look at sort of 24-month forward valuations, just still at 19-20 times. That's why our sense is, look, you may trade sideways for the 3 to 6 months, but as corporate profits come back, more so in the second half of next year, market should end higher on a 12-month basis. So we have a Nifty target of 20,500, which basically would be around sort of 11% upside from current levels. So the way you sort of decompose that is you get a 15% earnings growth compound, and then you lose a little bit of sort of 4-5% on the multiples. That's how we get to our numbers.
Good morning, Nantara joining in. So Goldman Sachs Nifty target for the new year is 20,500, an upside of almost 11%. The question is, will India continue to be the best performing stock market on this planet? Are you expecting the outperformance to continue?
I mean, as I just said, look, I mean, in terms of our regional allocations, we are market weight India. So we do think that there are other parts of the region, at least in the near term, in the first half, which will likely do better than India, notably, as I said, China and Korea, because they got their own catalyst in terms of China reopening, as well as kind of the Korea, which is a much more deeper cyclical markets, and sort of there are signs that the semi-cycle there is turning. So obviously, as you go into next year, the market may start to price that. So we don't think India will be a strong outperformer next year. But in terms of the path, as I said, we think the first half is likely to be weak, but then you see a recovery in the second half of next year calendar, which will bring India to sort of fresh all-time highs of 20,500.
20,500 target for the Nifty, an 11% upside by Goldman Sachs, bringing you all the New Year specials right here on the channel. Thank you so much for being live with us.